In this video, we're talking about one of the most exciting developments in crypto in terms of real-world impact. RWAs, aka real-world assets. If you've been wondering how crypto connects to the actual economy, this is it. Welcome back to the DeFi 101 course. This course is made with support from the Solana Foundation and is designed to take you from a crypto investor to a crypto user. You can find a link to the full course playlist as well as supplementary written materials in the video description. Now let's get into it. Here's the big idea. RWAs are traditional assets. Think real estate, stocks, bonds, gold, or even collectibles that have been brought onto the blockchain. It's like creating a digital version of something that exists in the real world. This is one of the fastest growing asset classes, not only in crypto, but in the world globally. Since 3 years ago, the total value of real-world assets on-chain has grown from $150 million to over $8 billion. That's more than a 50x increase in 3 years. And RWAs are getting massive attention. Recently, Larry Fink, the CEO of BlackRock, went on CNBC to talk about tokenizing stocks and bonds. When he does that, RWAs are what he's talking about.
We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, CUSIP. It'll be on one general ledger.
And Larry Fink is just one example of a traditional finance person or institution who's getting interested in RWAs. But he's even predicted that you could have most or all equities and bonds eventually tokenized on-chain in this way. An RWA is a real-life asset tokenized on-chain. Let me give you an example. Imagine an apartment building worth $10 million. Traditionally, investing in something like this would require huge amounts of money and lots of paperwork. But by tokenizing it, aka turning it into a real-world asset on the blockchain, that same building could easily be divided into thousands of tokens, letting anyone invest with as little as $100 or even less. And why is this a big deal? Because it, first, makes previously inaccessible investments available to anyone. Second, lets you trade those assets 24/7. They become liquid. Third, removes many traditional middlemen who make things more expensive and add friction in transacting. Next, it makes everything more transparent. It allows you to bring liquidity to traditionally illiquid assets and more. And now you might be thinking, this sounds great, but what's actually happening in this space? Here are a few real-world examples. Government bonds being tokenized, real estate projects accepting crypto investments, company shares being traded as tokens. There's even agricultural products being tokenized. And one of my favorite examples, there's a way to buy tokenized uranium on-chain. And to be clear, RWAs are still in their early stages. While technology is promising, there are some important things to consider. First, these assets will still need to comply with real-world regulations. Thankfully, these are getting friendlier with a new crypto-friendly government in the United States. Next, you still need to trust that the entity that's tokenizing the asset, so it's not totally trustless like other crypto applications, and the legal framework is still being developed in many places. RWAs could be the bridge that finally connects traditional finance with crypto in a meaningful way. We're talking about bringing trillions of dollars worth of real-world assets onto the blockchain. RWAs move real-world assets onto the blockchain to make them more accessible, tradable, and efficient. Let me know in the comments if you'd like to learn more about specific RWA projects or how to get started investing in them. To learn more about new opportunities in the crypto market, be sure to check out our newsletter at newsletter.dynamodefi.com. And if this video was helpful, give it a like and subscribe to get more videos like this. Thanks for watching, and until next time, this is Dynamo DeFi.